The European currency gained against the US dollar in early trade yesterday. The British pound also edged up, paring early losses. The risky currencies were supported by upbeat economic data on business activity in the euro area and the UK. Manufacturing activity was not robust, especially in Germany, but strong performance in the services sector managed to right the ship. Downbeat data on US manufacturing activity released late in the session pushed the riskier assets higher. The US manufacturing PMI dropped to 49.9 from 51.9 in March, highlighting a contraction in business activity. Against this background, the greenback suffered heavy losses. The US services PMI dipped to 50.9 in April from 51.7 in the prior month, but remained above the 50-point mark, separating growth from contraction. Today's macroeconomic calendar is full of important news releases. The day will start with the IFO Institute's report on business climate, current conditions, and economic expectation in Germany. The indicators are expected to improve, which may support the euro and drive it higher. The UK is set to report data on industrial trends orders, which is of secondary importance to traders. Therefore, market participants will most likely shift their focus to US statistics. US durable goods orders are estimated to have increased by 2.5% in March. In theory, this could back the dollar up. However, with no other major reports coming out of the United States today, if the euro gains strong upside momentum in early trade, the British pound may follow suit, keeping the greenback under pressure. From a technical perspective, the 1-hour EUR USD chart shows that a false breakout at 1.0689 will generate a strong buy signal, pushing the euro up to 1.0726. If the price fails to consolidate above this level, the volume of short positions will increase, with the European currency sliding back to 1.0689. If the price breaks below this level and tests it from the bottom up, the euro will dip to 1.0661 and even 0.627. At the mark of 1.0627, I recommend going short on rebound to catch an intraday correction of 25-30 pips. Long positions at 1.0661 and 0.689 can only be considered on a false breakout. Alternatively, if bulls overcome 1.0726 and drive the price above this mark, supported by IB data from Germany, the euro is expected to extend gains to 1.0754 and 0.779. At the level of 1.0779, it would be wise to go short on the rebound, expecting a 25-30 pip move. Going short at 0.754 and 0.726 will only be relevant in the event of a false breakout. Speaking of the pound sterling, a false breakout at 24.23 will generate a buy signal, allowing the British currency to extend its bullish correction. However, its upward move is likely to be limited by the 1.2478 area. If the price fails to break above this level, a sell signal will be generated, with sterling diving to 24.23 or even 23.83. A false breakout at the level of 1.2383 will make it possible to go long. Long positions on the rebound can be opened at 1.2340 with a view to catching an intraday correction of 35-40 pips. In a bull case scenario, if the price breaks above 1.2478, the British pound is expected to rise to 1.2532 and even 25.75. At the mark of 1.2575, traders are recommended to go short on a rebound, counting on a 25-30 move. Short positions at 1.2532 and 24.78 can only be considered on a false breakout. Best of luck.